Hola! What's happening? Blake, Buddy, and Django. How are you, fellas? We got ourselves a Monday session coming up. The best part of the week, a fresh outlook on markets. Let's check out. Where did the S&P 500 leave us? I think it was a pretty sobering kind of finish to the week with the stock market. What do we got? 6 people joined in so far. That's cool. I'll just keep going. So, just adjust the volume of the music down a bit. There we are. So, if basically this is the starting point of this year, roughly where this is here, 2024, January, February, March, all nice, consistent bull trend. This gray line here, sort of depicting that trend. Just last week, we broke that trend. We lost it. This was the most evident part of that break. This candle here, this red downshift here. You can see there's somewhat of like a triple top situation here too. You could even argue that that's it almost looks like a head and shoulders basically. The neckline is a little bit unclear, but you've got the hallmarks of a head and shoulders there. You got a peak, a higher peak, and then a lower peak. So right now we've lost that trend, that gray trend. We need to see what the new week is going to throw at us. Now, to get up to this triple peak on the S&P 500, we were thrown up there by this triangle, this bullish pennant, because it came out of an uptrend. The textbook play was to break up, which it did. It just didn't take us very high. It only went like, say, the distance of the pennant opening, if that, like maybe not even that. It didn't even quite make that. So just zooming in on the structure, this was a bull flag from the past here. I might delete that just for clarity. And this. The main thing I wanted to hone in on was this green line here. So this little high here created a peak. It then, bit of resistance there, same level. Now you've got support, 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 and support. So this feels like it's some kind of line in the sand at the moment. And what we're facing is a retest of that line just at the moment. And we are currently finding support on it. So for crypto to continue moving higher, I feel like we really need to hold a pivot at some stage. This would be excellent if we could pivot here and then start shifting back upwards, even if it's like an inverse head and shoulders type situation like that. You know, creating a neckline like that to put us back up to test the new, like go into price discovery again. That could be something that plays out, and that might take a little bit of time. It could take us, you know, late April into early May. So but on the contrary, if we lose this, obviously crypto's going to have a hard time staying up leading into the halving. Okay, so that's what we're looking at this week. Key point to start off with is this green line. We need to make sure that the S&P 500, we have to see if it's going to hold. If this S&P 500 green support line is going to hold. If we lose that, then we have to look for other support ideas, and that is this one here. You got resistance, maybe not, so that's a gap up. but support. Now that level is something like this. I might make the line a different color for that level. But it's roughly in that sort of area. Let's go pink. Alright. So those two support ideas is what I have going on. In the near future, if we lose the green line. Okay, so back to Bitcoin, and I'll change this chart to say a DOGE chart, Dogecoin. We're less than half an hour away from the Sunday close. Closing the Sunday candle. It's been a kind of like boring kind of weekend, really. Oh, some alts have actually popped off over the weekend, but last week was kind of devastating with the correction. Beautiful correction if you're in shorts, of course. Or if you're an investor looking to buy more. Like you want dips, right? You want pullbacks. You want opportunities to enter at a discount. And that's what this market has produced. So the way I see it is that this is only a good thing that we've done this pullback over the last few days, the last week. It's an opportunity, and I think this is why I made the thumbnail the way it is, because some people may see it as a disaster, other people may see it as an opportunity. So let me just open this up. YouTube, AI. So this is all AI art that I've been creating. Yeah, this. Okay. So the title of this stream, A Path of Destruction or Opportunity. So for me, I certainly see the opportunistic side to this, even though it's chaotic and disastrous. As we know, things are starting to escalate in the Middle East. You've got Iran doing all those drone strikes and ballistic strikes against Israel. They're sort of upping the ante there. Hopefully that gets controlled and things can de-escalate. That would be good, but no one wants war, right? No one wants a big conflict or further conflict. But I don't know. We'll have to see what happens. This is the world stage at the moment, and it's all playing out before us. So, shout out to New York. What's up, New York? What's up, JL? So, Bitcoin, it's trying to do some kind of a bounce so far. There is still a downtrend to contend with. We're still in a downtrend there. Nothing changed there. Let's just bring out the key levels here. Okay, so we've got our all-time high level. We've got what I would consider a range. We're in some kind of range. Yes, we've had activity outside the top, but that's very brief. As we've had activity outside the bottom, which is brief, and it doesn't represent the average. I think the average kind of situation is very much like that. So this is why I've got the rectangle where it is. We are approaching the halving, so that's coming up soon. Let me just see if the date has changed on that. So we're 4 days and 23 hours away. So basically 5 days away. 4 days, 23 hours. What does that look like on here? Yeah, so it's pretty much gonna be, for me, the 20th of April. So Saturday this week, roughly. Probably Friday this week for you guys in the US, because you guys are a different time zone. Can much happen between now and the actual halving date? I don't know if the halving date is actually going to produce any kind of, actual massive run just on the day. I think it'll probably just continue on its path of volatility. It's not really gonna, once the halving happens, it doesn't just go bang and up. I mean, it may, but I don't think, that's not my forecast. Oh, did you lose sound, Johnny? You can't hear me? My OBS is telling me that it's working. Okay, all good. All good. So yeah, this rectangle, we are still very much in the range. There's been no loss of the range. We're on the scary. We came down and tested the scary side of the rectangle. This is the exciting bullish side of the triangle, of the rectangle. Notice how the mood changes with it. Let me just depict this really basic. When there's a range, right? Let's say this is the range. And let's divide it in half. Let's just go like roughly like this. Okay. There is a side of greed and there's a side of fear to the range. Like you got top side, people tend to feel pretty bullish and happy and giddy and drunk. And then when things get a bit scary, you get, oh my god, we're gonna lose, we're gonna go down, this is the beginning of the end. And it's so emotional being inside. It's just a range, guys. Like, chill. So until an outcome has been chosen, there's no real need to stress about it. Just play the range, even buy the dips, and you could even take profit at the top of the range, or go short at the top, until invalidated. Until a range gets invalidated, just play it the way the ranges are played, and that is buying the bottoms and selling the tops. So buys down here, sells up here. Shorts up the top, open the shorts, and then close the short down here, or take profit. Now, the yin and yang with shorts is, okay, with open. So open short / close long. Close long at the top, open short at the top. Close short at the bottom, open long at the bottom. As a rule of thumb, this is very simplified basics. This is buying the dips, These are dips. What have we just been through with Bitcoin? We've been through, if we're looking at the range, you just have to try and smooth it out in your head, Like, okay, came up to resistance, came down to support, came up to resistance, came down, well, not quite down as low as we wanted, but down to a support. Up to resistance, down to support. Is there evidence that we found support on the bottom of the range? Hell yes, there's evidence. Look, let me zoom in and show you. You've got a low. You've got now a higher low, evidently, right? And we've started to crack a higher high now. So we're actually uptrending on this time frame. Just in this little snapshot of space here, this is an uptrend. So we're ticking up. Just like we were thrown into a downtrend over here. We had a high, technical lower high, lower low, lower high, lower low, lower high. So this point right here, in the last couple of hours, we've changed the character back to an uptrend on this little window of time here. So for now, if you were lucky enough, you bought, whether it be on Bitcoin or altcoins or whatever you did, you bought around this zone, like around this area, this general vicinity has been a really nice buying opportunity, just as it was back here, right? So let's wait. Let's just hold these positions if you open them. With stop losses, you know, of course, if you're trading, especially on leverage, you want to track that thing with protection. Oh, Coley, $4.99 super chat. Love you, Coley. Thank you. Appreciate that. Thank you for the support. So, yeah, bouncing off the support, traveling up, and finding a potential another test of this high. So keep an eye out, guys, because if we get a lower high, that could be the beginning of a larger corrective move, and we may lose this range to the downside, which is not a problem. You know, roll with the punches. Everything the market throws at you is an opportunity. It's not bad. The only time that the market going down is bad is if you're overexposed and you didn't stop your position out from being wrong, right? So if you take I love to do this, the market basics, the lows, the highs, the lows, the highs, right? We all know that the market goes high at times and that the market dips and goes low at times. Don't panic about it. It's reality. That's what happens with markets. They cycle. And throughout all time frames too. Like you get bigger ones that span over, you know, longer periods of time. And even on the micro, you've got highs and lows, right? And these are the day traders. They love this shit. It goes, you know, all the faster cycling. And then lo and behold, surprise, surprise, even within that, there's probably a lot of noise to trade as well. And that's the 1 minute boys and girls. Anyway, so in the highs and lows, just roll with the punches, roll with the market. If it's low, that's where you're hunting out longs. If it's high, you are taking profit off hopefully the longs you took, and you are considering maybe, you know, with evidence of resistance, going short, you know, and catching the downswing, going short. Now, when there's evidence of support, close those shorts out, take the profit, rinse and repeat. This applies to all time frames. You can do this on the 1 minute chart. You can do this on the 1 month chart, like the 1 week, the 1 hour, whatever you pick. Like just the basics. It's good to get a good grasp and just revisit the basics as often as you need to, just to get a grip. Because markets can be confusing, and they can, you know, they can feel euphoric and exciting, and they can feel terrifying and dangerous, and like everything's over. So just take it for what it is. It is emotional at the moment. Everyone's kind of freaking out and panicking, not just in crypto, in the stock market as well, right? So this is no different. There was a really good image that I'll go dig out from Twitter. I'm just gonna call it Twitter. Someone made a great point. Stop calling it X. Stop saying X or Twitter. Just call it Twitter, because everyone understands Twitter. I'll just go to Twitter and dig out this picture that I felt was really helpful. I'll just go open image in new tab, and it's this image here. This is a very high time frame chart. This is a 5-day chart, almost a weekly, right? The Mt. Gox Black Swan event. Now, a Black Swan is an unforeseen event that causes a big shake-up in the market, generally a drawdown or a crash. So Mt. Gox caused panic. That was one of the, if not the first cryptocurrency exchange to buy Bitcoin on. It had the huge Mt. Gox collapse. Everyone lost their money in Mt. Gox. Huge correction. Same with Bitfinex. Bitfinex went down. People lost money. Another market crash. COVID-19 outbreak. A lot of us were all there for that, looking at markets. It caused a big flash crash as well. And then recently, or it's not so recent now, but the FTX collapse. Another black swan event. What do all these have in common? They have swift recoveries. See how all black swans get recovered. The market wakes back up again and goes, oh, okay, the world's not ending. It's just, it was a bad event that the market freaked out on. And let's get back on track. Unless it's I haven't really seen, at least in crypto land, for Bitcoin, there's never been a black swan that has caused it to collapse entirely and spend years and years going down. So there's nothing to be concerned about, I don't think, at this stage. I'll stress that at this point in time, there should be no reason to be freaking out and quitting crypto or running for the hills or running into cash or whatever. We've still got our larger market structure intact. Let's go out to the daily chart. Stock Money Lizards is a Twitter channel or page, and they post a lot of analysis, like technical analysis, that kind of thing. Pretty cool. Let me just close some of these tabs that I've got open. Okay. Yeah, so check it out, Stock Money Lizards. I'll put it in here, Stock Money Lizards. It's a Twitter page, or an X page. What are we, about 6 minutes away from the daily close. It is the end of the weekend, guys. I hope you had a good weekend. I had a pretty boring one. I just had work. Pretty standard, stock standard weekend. But yeah, look, the Sunday candles rounding out, pretty cool. Look at the last couple of hours has been this really nice uptick on Bitcoin. Look at that. Look at that hour there. 8 o'clock this morning for me. Huge 2.5% rally. 2.6% basically. Followed up by another decent candle. Not as tall, but still 0.5% up. That's pretty good. 5 minutes left of the day. Let's go to the daily chart. Let's analyze the daily. So we've got a couple of really nasty. The Friday and Saturday candles were brutal. Arguably the Thursday wasn't great either, but it was that Friday, Saturday, very nasty. All eyes on the range, right? To be honest, this is the way I see the range. If we go up, awesome. That's great, I have positions that will ride and go up and continue into profit, right? If we lose the range, if we go down, that is also great because I can make the positions that I have even bigger by buying the dip. See how there's no reason to panic at any point in the market? Just play it. Play the advantageous side to every situation and you'll do well. Don't dwell in the negative and use risk management if you're trading. Trading is a very different game to investing. Trading, especially with leverage, is you need to have an exit point. You have to have a parachute. It is dangerous to have no downside protection. So if you're in a short, have a stop loss to the upside. If you're in a long, have a stop loss to the downside, you know? And it's as simple as that. And then, you know, don't tolerate any drawdown. If you can manage to do that, a lot of it, the most important part of trading, I was saying this with Trago, or it may have been Ocean, I think it was Trago though. The most important part of trading is the entry. Where you choose to open a position is vital. It's probably like 95% of the importance. I would argue equally secondary to your entry is a stop loss. You have to have a stop loss is in a you know, a very sensible place. Stop losses are tricky because you want to allow the market to, you want it to accommodate the volatility of the market, put it that way. Your stop loss has to accommodate the movement, you know, the sporadic nature, depending on the time frame and the leverage you're playing. Now, one way to do that, one way to tell like how the market's behaving with range, like what is its range of activity. Look at the ATR. That is the average true range indicator. So just rather than me pulling the indicator up, you want to get an indicator that basically shows you what the average highs are, something like this, right? And then what the average lows are. And when you open a position, right? When you open a position, let's say you opened a position here long, you have to tolerate things pulling backwards this much. You know, so stop loss outside of the range makes sense. Like, not way outside, but responsibly outside the range. Just to allow the market to breathe, because see how the market likes to breathe. It likes to go in and out, up and down, in a range. The market inhales and exhales money. And if your stop loss lives inside that breathing range, it's gonna get triggered. It's gonna go off. And if you can't endure a stop loss that is half the width of the range, your leverage is way too high. If you're losing money repeatedly by getting stopped out, it's because your tolerance for drawdown is so restrictive that you're just going to get beat up every time you trade. Every time you get into a position, you're just going to get stopped out repeatedly, and you're going to basically bleed your account away, and you won't have anything left to trade with. So that comes down to timing. Like, you know, try to get a feel for the range, that average true range. Let me show you the indicator, what it looks like. The ATR. The ATR stop loss finder indicator is interesting, and that's by user verified or verifid, VERYFID. ATR stop loss finder, ATR average true range. What does that look like? It looks like that. See, it's a snake. It hugs the price, so you got the highs and the lows. So it's suggesting that at this candle, at this point in time, the range of that candle, or the range of the price action, is from here to here. So if you entered somewhere in that candle, you have to be willing to endure a pullback as large as the range is depicting. See? So if you had your stop, if you entered here in a long, for example, on that candle, your stop loss would be just beyond the range. And let's say you went long. Did it ever trigger? No, it didn't trigger, and you went up into the profit areas, right? So that was probably a winning spot. I know I cherry picked that spot. Let's find a spot that didn't work out. Let's say you went long on that green candle there, and your stop loss lived just outside the range at that point in time, right? There's the top of the range, there's the bottom of the range. Obviously, 2 candles later, you got stopped out. So that's what this indicator does, is it shows you the range at that point in time. So right now, let's go to the very current candle. The range on this hourly time frame exists from here to here. That is the range. So if you're in a long, you want your stop loss roughly here, and if you're in a short, you want your stop loss roughly here. That way, if the market takes off and goes up, the short will stop out here. And if it goes down, the longs will stop out here. And that's just a measure of protection, you know. So that's the ATR. I think there's a, just see how the other ATR is. I think this is an oscillator looking thing. Yeah. I don't know really how to use it when it's in that form. I prefer the on chart method of the range, but here we are. So it's we're 3 minutes into the daily. The new day, fresh day. The Sunday candle, what was it? It was buy pressure on the bottom side from here to here. And it was a candle body on the top side. So some kind of like I mean, dare I say it, it looks like a hammer, doesn't it? It's a very tall candle though for a hammer. It's like 50-50. You've got 50% tail, 50% body, candle body. So I don't know. Maybe it's a. I mean, this was kind of a hammer too. It's a red hammer, this one, but it's about 50-50 as well. You can get stronger hammers, of course, with really long tails and short bodies, like this. But even that, it produced a downswing first, but then later an upswing. Yeah, so that's what we got at the moment. We're sort of mid-range, have you noticed that? If we're calling this the range, we are smack bang in the middle. We haven't really, you know, arguably we're on the downside, the bottom side of the range. We haven't really broken bullish just yet. Or we haven't gone back optimistic just yet. We're still dealing with the resistance of the midpoint, if you will. I don't doubt there's probably a Fibonacci level that we're probably stuck on right now. Go to this chart. Let me just delete some of this stuff. These are just lows that I was looking at. We've seemingly, by the way, bottomed out here at the moment. We're like using this low here as our bounce point, our support, which also ties in with these lows over here, which makes me think that this is a reasonable spot to call it the bottom of the range. So that, right? And then a reasonable spot for the top of the range is something like that, I would say, because look, you got all of that activity at the top and over here. Yes, there's a few days that outlie, but they do not represent the average. They are outliers, same as that wick, it's an outlier. So that's the way I see the range right now. Fibonacci perspective, you've got a high to a low, and if we go down to a lower time frame, we're currently dealing with a 382 fib level on the recovery. The 0.5 fib is $66,900. So if we can test that, maybe get through it, it may provide resistance and we might go down further. We just have to wait and see what it throws at us. The golden pocket is up at 68,300 to 68,600-ish. It's another pretty common spot to find activity off, rejection if you're trying to recover. Yeah, that's about it. Johnny says, hey Rick, if you have time, can you look at GNS stock 4-hour chart and confirm if that's a bullish harami, please? I don't know what a bullish harami is. Is that a candle type? Bullish harami. I think a harami is a candle that exists. Just looking. Okay, so it's when the previous candle was red, and then a candle that exists next to it but is smaller is green, like that. And there's a bearish one. Okay. So you want to just confirm GNS stock. So it's a stock, it's not a crypto. GNS, Genius Group. Oh, it looks like I've been doing TA on this before for you. On the 4-hour, you say. And you're saying, is it a bullish harami? I don't think so. I think a bullish harami requires a green candle. Or are you looking at the extended trading hours? Okay, you're looking at, I'm guessing you're looking at extended. Yeah. So 4-hour. Yeah, I mean, yes. Looking at this, looking at the requirements of a bullish harami. Yeah, you've got a big red candle, and then you've got a smaller green candle next to it. So yeah, this could end up being a bullish harami, which is, look at this description. It's saying that a bullish harami produces a reversal to the upside after downtrending. 1-hour chart. Now I'm just going to go back to Bitcoin. I want to go trend detecting. Is there any trend at the moment that we should be aware of? There's a couple. There is a couple. I can see a trend here. Let me just make these lines solid. I can see a trend like this, which may take time to actually come up and test that line. And we've also got a sharper trend which has since broken, from what I can tell without drawing it, but I'll draw it in anyway. We had a trend like this, which has since broken out in the last couple of hours. So we've got a couple of different situations going here with Bitcoin. Right now, just trying to get a feel for what may be the trend going up. Perhaps we have to see the bottom side here is not clean. You can't get a very clean, like that would be that's rough as hell. I totally see that. It's rough, right? But the angle of attack is something like that on the bottom side. So maybe it's more of a zone, but we're working with something like that on the bottom side. And it's climbing, so the moment that gets, potentially invalidated, like let's say it does that, then okay, cool, that idea has been broken and we're going down. But for now, we've got some kind of launch pad happening and we're climbing, so keep an eye. Is there another trend trying to form out? Just picking pivot points. That's all I'm really doing. Trying to make sense of what is happening at the moment. With pivots. It's probably not enough information to really tell at this stage. Much further than what I've got on the chart right now. This line's kind of been beaten at the moment, so it's not really producing any answers or perspective. But yeah, let's see what the rest of the day throws at us. We're in the Monday candle now. UTC Monday. It's been Monday in Australia for 10 hours already. But yeah, that's pretty much all I wanted to cover today. Was just really drawing a line out and showing that we're in a rectangle. We've found support thanks to this low here. We actually swing failed it on this chart. We got a little lower, just a touch, and have bounced dramatically up. You know, if you want to get a measure of the bounce, it's like so far it's like a $5,000 bounce back upward. So bulls, I still feel, look, bulls, maintain the faith. We have not lost the broader trend. We are still bullish. This is still a bull trend overall. I don't see reason to go put your bear suit on yet. If it does, if it throws reasons at me or at us, I will totally highlight it. I'll say we are bearish, like we're going down, but we're just not getting that right now. We're still bullish. We're still on a higher time frame. That is what the chart is saying. So keep your bull horns on for now, I would say. We have a beautiful bullish case still, I think. If we lose these lows, then from a, you know, like a mid-time perspective, like a mid-range time perspective, if we get shoved down, that's where I would be bearish for the shorter term, and perhaps we get in touch with this blue line here as we approach the halving. You know, hypothetically, if we were to lose this rectangle and come down, maybe we find support on this blue line. I don't know if you can see that, but it's between that point and this point. There's a line that comes up. So maybe that would be a support. That is down at basically $50,000, 50,000. But yeah, no sign of that yet. No sign of that yet. The writing on the wall right now is a test of support. Successful test and bounce at support. Heading back upward. Awaiting, you know, the next test, which is, I would argue, up here. Like, these are the highs of our range, remember? That's why this rectangle exists on the page, on the chart, because these are the highs and those are the lows. Alright, nice and simple. I like keeping it simple. Simple, high time frame analysis. Nothing is stronger than that. You're not going to get stronger indication down on the 5-minute chart. The lower you go on time frame, the less bearing you have, like the less perspective you have on the market. The higher up you go, the more perspective you gain, right? It's like a bird. It's a bird's eye view. But obviously the 1-minute and 5-minute chart are relevant to the context of what you're doing. Like if you're scalping, the 1-minute chart makes sense for scalping. Does the daily chart make sense for scalping? Not really. Not when you're trying to get the sensitivity of what is happening right now. Like, you know what I mean? So they're all relevant. They all have their own context, and they are all important. But if you want to know direction overall of the market, then you need to jump out onto the higher time frames to get that perspective. And when you're trying to get a gauge on what the market's doing overall, like whether we're in a bull market or bear market, you need that higher time frame perspective. So the daily's pretty good for that. The 4 hours, not bad. But yeah, the higher time frames, We're sweet. We are golden. All right. I think that's about it. I'm running out of things to talk about. I'll see if I can come up with something tomorrow to stream about, talk about. Maybe the market will do something interesting in the next 24 hours. But thank you for tuning in, and I'll catch you on the next one. Have a good one.